How's it going, everybody? Sorry for all the background noise in this one. I'm delayed at the airport, but I wanted to get this video up before market opens on Monday. So this is a video for ticker symbol AAC or AAC Holdings. This one is looking really nice for a lot of reasons. I know there's a lot going on the chart here. So let's break it down. The number one reason why I like this trade setup is because it's forming a ascending wedge. Again, that's when you have a resistance line, a resistance level, and then you have an upward trend line forming that triangle. And the idea being once it breaks the resistance level at $3, it'll break out. So that's the main reason. You may view this yourself as a wedge instead, because we don't have, or rather, we do have a 3 touch on the 3 level here, here, and here. So you may view this as an ascending triangle or a wedge. In either case, it's a consolidation pattern after a big move down from $6 post this October earnings report. And once it breaks out, we have some nice clearly defined levels of support and resistance to the upside, and a nice gap that has yet to be filled. So that's the first reason why is the ascending wedge. However, there's quite a few reasons why. The second is this broken downtrend. If you look at this trend line here, in the past month, really the past week, it broke this downtrend with a higher low, and you got this low here, and now you got a higher low, and it's broken above this trend line. So that's the second reason. There's a change in trend, and that's coupled with another reason, which is a inverse head and shoulders. Don't really have a good way of showing this other than these highlighted circles here. You can see the head or the low at 133 and the two shoulders here both at $2. So inverse head and shoulders, wedge or ascending triangle, as well as a broken downtrend, but that's not it. The gap here has yet to be filled, and usually when this happens, at some point, if there is a change in trend, it tends to fill this really fast. So that's just another reason, and it gives you a nice target for your upside limits. So the gap fill is another reason. Another reason is a couple weeks ago, 3 insiders were buying up shares, I think at around 275 or 250, and that showed a 61% change in ownership over the last 6 months. So that's another reason. Clearly they think there's going to be more upside to their own stock, so they bought more. The sixth reason why I like this trade setup is the percent of the float that's short. Currently, as of Friday, it was 30% short float. I really like that for additional upside from a short squeeze. And I like the speed at which your upside limits get hit when there is a short squeeze. The seventh reason that I like this trade setup is just simply that you don't have to go long the equity. You can buy some calls if you want. It does have options. I don't like how, I think I looked, and yeah, let's just look now. The strike prices are kind of far apart. Yeah, it's $2.50 strike and $5 strike. So I'd probably go in on the $2.50 and maybe less so on the $5 strikes. $5 is my target, so I'd be comfortable trading the $5 strike. However, I'd probably sell those into any big move that happens, as I don't want to try to wait until they're in the money, given my target is actually the strike price. So just another reason why I like this stock. And it is also available on Robinhood, which is also good because once it does break out, you like seeing all these retail investors adding to the liquidity there. Lastly, the risk reward is just way better than any other trade setup I can find. It's about an 11 to 42 to 114%, meaning that's a 11% risk for a 42 to 114% reward. And I got that by looking at these support and resistance levels. So I think it'll go past 4, given that there's a gap here, and the gap it started at 5.30. However, there's this low here at $5. So on the cautious side, we'll say the gap closed at $5, and so my upside target is $5. So really nice upside. And then if you look at the downside, I'm going off of this low here from Thursday, which is $2.50, so it's about 30 cents from the close. I think going into Monday and Tuesday, given this huge top wick here, we'll see some more selling, and it'll be a nice chance for you to get shares under 280. We did see a aftermarket jump in price, but I think that'll come back down with a little bit more liquidity going into Monday. So I'm going to be buying this one aggressively. I might buy a few 250 strike calls and a few $5 calls as well. So just keep your eye on this one, start pricing in, and then obviously it's always better to wait for the confirmation after the ascending triangle is broken out of, which would be at $3. So once you see it close above that $3, and obviously this trade would be defunct if you see a close below this support line in the ascending triangle. So there it is. I'll be posting some updates to this video as the trade progresses, and I'm going to be getting in on Monday. So good luck.